Something extraordinary just happened in the gold market. And if you're paying attention, you'll notice that the banks aren't talking about it. In fact, they're doing everything they can to keep this quiet. Because what's unfolding right now threatens the very foundation of the banking system as we know it. Let me show you what I mean. Gold just broke through a critical technical level that hasn't been tested in years. But here's what makes this different from every other gold rally you've seen. This time, it's not retail investors driving the price. It's not even the usual suspects. The buying pressure is coming from an entirely different source. And when you understand who's behind this move and why, you'll realize we're witnessing something that only happens once in a generation. Central banks around the world are accumulating gold at a pace we haven't seen since the collapse of Bretton Woods. Think about that for a second. These are the institutions that print money. They control interest rates. They're supposed to have unlimited confidence in the fiat currency system. Yet they're converting their reserves into physical gold as fast as they can get their hands on it. Why would they do that? What do they know that they're not telling us? The answer is buried in the mechanics of the banking system itself. And once you see it, you can't unsee it. The entire structure is built on a foundation that's cracking. Not might crack. Not could crack someday. It's cracking right now. And gold is the canary in the coal mine, screaming a warning that most people aren't hearing yet. Let me take you inside what's really happening. The modern banking system operates on something called fractional reserve lending. You probably learned about this in school, but here's what they didn't teach you. Banks are only required to keep a tiny fraction of deposits on hand. The rest gets lent out, creating new money in the process. This works beautifully when everyone has confidence in the system. But confidence is a fragile thing, and right now that confidence is eroding faster than anyone wants to admit. Look at what happened with the regional bank failures we saw. Not small community banks. These were institutions with hundreds of billions in assets. Silicon Valley Bank, Signature Bank, First Republic, gone. And the official story was that these were isolated incidents, poor risk management, nothing to worry about. The system is sound. But here's what they're not telling you. Those banks failed because of something fundamental, something that affects every bank in the system. They were holding long-term bonds that had lost massive value as interest rates rose. When depositors got nervous and started withdrawing money, the banks had to sell those bonds at a loss. And once that started, it became a death spiral. Now you might be thinking, okay, but the government stepped in. They guaranteed the deposits. Crisis averted. Except that's not what happened. What actually happened is they revealed something terrifying. They showed that the banking system cannot survive without constant government intervention. Without the implicit guarantee that taxpayers will bail out every failure, the whole thing collapses. And gold knows this. Gold has always known this. That's why central banks are buying. They're not buying because they think gold is going to go up 20 or 30%. They're buying because they're preparing for a scenario where the current monetary system fundamentally breaks down. They're buying insurance. And when central banks buy insurance, you should probably pay attention. Let me give you some numbers that should make your jaw drop. Central banks have been purchasing gold at unprecedented levels. We're talking about accumulation that dwarfs anything we saw during the financial crisis. This isn't normal market activity. This is preparation for something big. And here's the kicker. A lot of this buying is happening off the books. Unreported transactions. Gold moving from Western vaults to Eastern central banks through channels that don't show up in official statistics. We only know about it because the physical gold has to move somewhere, and people in the industry are noticing the flows. China is the most obvious example. Their official gold reserves show steady but modest increases in recent reports. But anyone who understands the Chinese gold market knows they're accumulating at a staggering rate. They're buying through state-owned banks, through sovereign wealth funds, through channels that don't get reported to the IMF. Why? Because they don't want to tip their hand. They don't want the market to front-run their purchases and drive the price up before they're finished accumulating. But it's not just China. Russia has been converting dollar reserves into gold for years. India is buying. Turkey is buying. Even countries that have traditionally been sellers are now buyers. Poland announced they're increasing their gold reserves. The Czech Republic is buying. These aren't random decisions. This is a coordinated move away from dollar-denominated assets and into hard assets that can't be printed or devalued by a central bank. And this brings us to the real warning that gold is sending. It's not just about inflation. It's not just about currency debasement. It's about the weaponization of the dollar itself. Think about what happened when Russia invaded Ukraine. The West immediately froze Russian central bank reserves, hundreds of billions of dollars just locked up overnight. Now, you might think Russia deserved that. Maybe they did. But here's what every other country in the world learned from that moment. Your dollar reserves aren't really yours. They're only yours as long as the United States government says they're yours. And if you do something Washington doesn't like, those reserves can disappear with the stroke of a pen. That's a terrifying realization for a central bank. It means your reserves aren't reserves at all. They're hostages. And the only way to protect yourself is to hold assets that can't be frozen. Assets that exist outside the Western financial system. Assets like gold. This is why we're seeing the rise of BRICS and alternative payment systems. Countries are building infrastructure to trade with each other without using dollars. They're settling transactions in local currencies. They're creating gold-backed trade mechanisms. And every step they take in this direction weakens the dollar's position as the global reserve currency. Now, the mainstream financial media will tell you this is all conspiracy theory nonsense. They'll say the dollar is as strong as ever. They'll point to the dollar index and show you it's holding up just fine. But the dollar index is measured against other fiat currencies. It's like being the tallest building in a city that's sinking into the ocean. Sure, you're still the tallest, but you're still sinking. Gold doesn't sink. Gold doesn't have counterparty risk. Gold can't be printed. And that's why it's sending this warning signal right now. Let me show you what's happening in the physical gold market, because this is where things get really interesting. There's a massive disconnect between the paper gold market and the physical gold market. On the COMEX, you can trade gold futures contracts all day long. Billions of dollars worth of gold changes hands electronically. But here's the thing. Most of those contracts never result in physical delivery. They're just bets on the price. Paper promises. But lately something strange has been happening. More and more contracts are standing for delivery. People are actually demanding physical gold. And the COMEX is having trouble delivering it. They're draining their vaults. They're offering incentives for people to take cash settlement instead of metal. They're scrambling. Why? Because there's not as much physical gold available as the paper market suggests. The same ounce of gold has been sold multiple times over through derivatives and futures contracts. It's fractional reserve banking, but for gold. And just like fractional reserve banking, it works great until everyone wants their gold at the same time. We're starting to see the early stages of that now. Not a full-blown run yet. But the pressure is building. And when it breaks, when the paper market finally disconnects from the physical market, the price of gold is going to do something that will shock everyone who isn't paying attention. Let me tell you a story that illustrates this perfectly. Back in the 70s, gold was fixed at $35 an ounce. The government said that's what it was worth, and that was that. But then something happened. France, under Charles de Gaulle, started demanding physical gold in exchange for their dollar reserves. They sent warships to New York to pick up the gold and bring it back to Paris. Other countries started doing the same thing. And suddenly, the United States realized they didn't have enough gold to back all the dollars they'd printed. So Nixon closed the gold window. He ended the convertibility of dollars into gold. And within a decade, gold went from $35 to over $800 an ounce, a more than 20-fold increase, not because gold became more valuable, because the dollar became less valuable once it was completely untethered from any hard asset backing. We're living through a similar moment right now, except this time, it's not just about the dollar being backed by gold. It's about the entire global financial system being backed by confidence. And that confidence is evaporating. The banks know this. That's why they're quietly preparing for a world that looks very different from the one we have now. They're stress testing for scenarios that would have been unthinkable a few years ago. Bank runs, currency crises, sovereign defaults, not in some developing country, here, in the developed world. And while they're preparing, they're telling you everything is fine. Don't worry, the system is sound. Keep your money in the bank. Keep buying stocks. Keep trusting the institutions that have failed you over and over again. But gold is telling you something different. Gold is saying, get ready. Because what's coming is going to reshape the entire financial landscape. Now, I want to pause here for just a moment because this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I put together a free guide that covers exactly how to get physical gold into your retirement account without triggering tax penalties. It's in the description below. This isn't about fear-mongering. It's about having options. It's about diversification that actually means something. Worth checking out if that's relevant to your situation. All right, back to where this is headed next. The technical picture for gold right now is absolutely screaming. We've broken through resistance levels that have held for extended periods. We're seeing buying pressure at every dip. The moving averages are aligning in classic bullish formations. But more importantly, we're seeing accumulation patterns that suggest institutional money is positioning for a much bigger move. Look at the commitment of traders report. Commercial hedgers, the smart money, have been adjusting their positions. They're not fighting this rally the way they normally would. They're letting it run. That's unusual. Normally, they're on the other side of every major move providing liquidity, but right now they're stepping aside. That tells you something big is happening. And it's not just gold. Silver is starting to wake up. Platinum is moving. The entire precious metals complex is showing signs of life. This isn't a one-off event. This is the beginning of a major trend shift. But here's what most people miss. The real move in gold doesn't happen during the calm times. It happens during the crisis. Gold doesn't go up in a straight line. It goes up in explosive bursts when fear enters the market, when something breaks, when the system shows its cracks. And we're due for one of those moments. The banking system is more fragile than it's been in decades. We have hundreds of billions of dollars in unrealized losses sitting on bank balance sheets right now. That's money that's already gone, but hasn't been recognized yet. It's a ticking time bomb, and all it takes is one more shock to the system, one more bank failure, one more loss of confidence, and we're off to the races. Think about what happened during the financial crisis. Gold was trading around $800 an ounce when Lehman Brothers collapsed. Within 3 years, it nearly hit $2,000, more than doubled. And that was with the government throwing everything at the problem. Quantitative easing, zero interest rates, bank bailouts, they pulled out every tool in the playbook. What happens when those tools don't work anymore? What happens when the next crisis hits and interest rates are already at levels where they can't be cut much further without going negative? What happens when the government's already running massive deficits and can't afford another trillion-dollar bailout? What happens when the public finally says enough is enough? We're not bailing out the banks again? That's when gold goes parabolic. That's when we see moves that make the previous bull market look like a warm-up act. And the banks know this is coming. That's why they're preparing. That's why they're buying gold. That's why they're building alternative systems. They're not doing this because they're paranoid. They're doing this because they have access to information you don't have. They see the stress building in the system. They see the cracks forming. And they're getting ready. But here's the thing. You don't need insider information to see what's happening. You just need to pay attention to what gold is telling you. Gold is the ultimate truth teller. It doesn't lie. It doesn't spin. It doesn't have a political agenda. It just reflects reality. And right now, reality is saying the system is in trouble. Let me give you another example of how this plays out. In Weimar Germany, people who held gold survived the hyperinflation. People who held cash saw their life savings become worthless. In Zimbabwe, the same thing happened. In Venezuela, the same thing happened. In Argentina, the same thing happened. Over and over throughout history, when fiat currencies fail, gold preserves wealth. Now, I'm not saying we're headed for Weimar-style hyperinflation tomorrow, but I am saying the risk is higher than most people realize. And the consequences of being wrong are catastrophic. If you're wrong and you hold too much gold, worst-case scenario, you have an asset that's held its value for thousands of years. If you're wrong and you don't hold enough gold, you could lose everything. That's not a balanced risk. That's a one-sided bet. And smart money doesn't take one-sided bets against their own financial survival. The other thing to understand is that gold isn't just about protecting against inflation or currency collapse. It's about having optionality. It's about having an asset that performs well in scenarios where everything else is falling apart. When stocks crash, gold tends to hold up or even rise. When bonds lose value, gold shines. When real estate becomes illiquid, gold remains liquid. It's the ultimate diversifier. And in a world where correlations between assets are increasing, where everything seems to move together, having something that moves independently is incredibly valuable. Gold gives you that. It gives you a hedge against scenarios you can't even predict yet. Because here's the truth. We don't know exactly how this plays out. We don't know if it's a banking crisis or a currency crisis or a sovereign debt crisis or all three at once. We don't know the timing. We don't know the trigger, but we know the system is unstable. We know the risks are building. And we know gold is the asset that thrives in that environment. The banks are sending you a signal right now. They're buying gold at record levels. They're preparing for instability. They're building alternative systems. They're doing everything they can to protect themselves from what's coming. The question is, are you listening? Are you paying attention to what they're doing, not what they're saying? Because there's a massive gap between the two. They're telling you everything is fine, while simultaneously preparing for everything to fall apart. And that gap, that disconnect between their words and their actions, that's the real warning. That's what gold is screaming at you right now. The system is fragile, the risks are real, and the time to prepare is before the crisis hits, not after. Look at what's happening in the repo market. This is the plumbing of the financial system, where banks lend to each other overnight. It's supposed to be boring and stable, but we're seeing stress there. We're seeing the Federal Reserve having to intervene to keep rates stable. That's not normal. That's a sign that liquidity is tight, that banks don't trust each other, that the system is under pressure. Or look at the yield curve. It's been sending warning signals, which historically predicts economic trouble. But more than that, it shows that investors don't believe the Fed's narrative. They don't believe inflation is fully under control. They don't believe the economy is as strong as officials claim. They're positioning for trouble ahead. Gold sees all of this. Gold is reacting to all of this. And gold is telling you to get ready. The move we're seeing now is just the beginning. This is the early stage of a much larger trend. We're going to see gold break through previous highs. We're going to see it establish new trading ranges that seem impossible right now. We're going to see mainstream investors who ignored gold for years suddenly scrambling to get exposure, and by the time they do, the easy gains will be gone. That's how these cycles work. The smart money accumulates early, when nobody's paying attention. Then the trend becomes obvious. Then the momentum players jump in. Then the retail investors pile in at the top. And by the time your neighbor is talking about buying gold, the move is mostly over. We're still in the early phase. Central banks are accumulating. Institutional money is positioning. The trend is forming. But it hasn't gone mainstream yet. That's your window. That's your opportunity to position yourself before the crowd figures out what's happening. And make no mistake, the crowd will figure it out eventually. They always do. But by then, gold will be trading at levels that seem expensive compared to today. And people will say, I should have bought when it was cheaper. I should have listened when the warning signs were there. Don't be that person. Don't wait until the crisis is obvious to everyone, because by then, it's too late to protect yourself. The time to buy insurance is before your house catches fire, not after. The banks understand this. That's why they're moving now. That's why they're buying gold at record levels while telling you everything is fine. They're protecting themselves while keeping you complacent. They're preparing for the storm while telling you to enjoy the sunshine. But you can see through this. You can read the signals. You can understand what gold is telling you, and you can take action before it's too late. The system is sending warning signals everywhere you look. Unrealized losses on bank balance sheets, inverted yield curves, central bank gold buying, stress in the repo market, rising geopolitical tensions, de-dollarization efforts, alternative payment systems. Every single one of these is a red flag, and they're all flashing at the same time. Gold is the smoke detector going off, and the banks are quietly heading for the exits while telling you to stay in your seats. The question is, what are you going to do about it? This isn't about fear. This isn't about panic. This is about recognizing reality and positioning yourself accordingly. This is about understanding that the financial system we've relied on for decades is changing, and that change creates both risks and opportunities. The risk is being caught unprepared when the system breaks. The opportunity is positioning yourself in assets that thrive during that transition. Gold is that asset. It always has been, and it always will be. Let me paint you a picture of what happens next. We're going to see more bank stress. Maybe not tomorrow, maybe not next month. But it's coming. The unrealized losses are still there. The structural problems haven't been fixed. They've just been papered over with government guarantees and central bank interventions. And each time there's a new crisis, each time the system shows its fragility, gold is going to surge. It's going to gap higher. It's going to leave people behind who were waiting for a pullback that never came. Because in a crisis, gold doesn't pull back. It accelerates. We saw this during the pandemic. When everything was falling apart, when stocks were crashing, when people were panicking, Gold was one of the few assets that held its value and then surged higher. It went from around $1,500 to over $2,000 in a matter of months. And the people who bought during that surge, even at what seemed like high prices at the time, they're still sitting on gains. Because gold doesn't just go up during the crisis. It stays elevated after the crisis. It establishes a new baseline, a new floor. And then it builds from there for the next move higher. That's the pattern we're seeing set up right now. We're in the accumulation phase. The smart money is building positions. The central banks are loading up. The institutional investors are quietly adding exposure. And when the next crisis hits, when the next bank fails, when the next currency wobbles, gold is going to explode higher. And here's what most people don't understand. The explosion doesn't happen gradually. It happens fast. Gold can move 10, 20, 30% in a matter of weeks when the conditions are right. And by the time you see it happening, by the time it's on the news, by the time everyone's talking about it, you've already missed the best entry point. That's why the banks are buying now. That's why they're not waiting. They know that timing the perfect entry is impossible, but they also know that being positioned before the move is everything. Because once it starts, there's no catching up. Think about the people who waited to buy gold during the last bull market. They watched it go from 800 to 1,000. They said, "I'll wait for a pullback." It went to 1,200, still waiting. 1,500, still waiting. 1,800. Now they're starting to panic. And by the time they finally bought, it was near the top. Don't make that mistake. Don't wait for the perfect moment that never comes. The banks aren't waiting. The central banks aren't waiting. The smart institutional money isn't waiting. They're buying now, while gold is still relatively quiet, while most people aren't paying attention, because they know what's coming. They know the system is fragile. They know the risks are building. They know that gold is the one asset that will protect them when everything else falls apart. And here's the final piece that ties this all together. The banking system's problems aren't going away. They can't be fixed with more regulation or more oversight or more government intervention. The problems are structural. They're built into the very foundation of how modern banking works. Fractional reserve lending means banks are always vulnerable to runs. Interest rate risk means banks are always vulnerable to rate changes. Counterparty risk means banks are always vulnerable to contagion. These aren't bugs in the system. They're features. They're how the system is designed to work. And gold knows this. Gold has always known this. That's why gold has survived every banking crisis, every currency crisis, every financial crisis in human history. Because gold doesn't have these vulnerabilities. Gold doesn't have counterparty risk. Gold doesn't have interest rate risk. Gold doesn't have bank run risk. Gold is just gold. And in a world where everything else is built on promises and confidence and trust, gold is the one thing that doesn't require any of that. It just is. That's the warning gold is sending right now. That's what the banks are responding to. And that's what you need to understand before it's too late. The system is failing. Not might fail. Not could fail. Is failing. Right now. In slow motion. And gold is the early warning system that's telling you to get ready. The banks are listening. The central banks are listening. The institutional investors are listening. The only question is whether you're listening too. Because the warning has been sent. The signal is clear. And the time to act is now, before the system failure everyone's preparing for becomes the system failure everyone's experiencing. The choice is yours. You can ignore the warning and hope everything works out. Or you can do what the banks are doing. Protect yourself. Position yourself. And prepare for what's coming. Gold is screaming the warning. The banks are responding. What are you going to do?